Good morning, everybody. Welcome to the Morning Blast. It is Monday already. I hope everyone had a great weekend. It is December the 15th all day. And as usual, you join myself and Mr. Michael Brown for the Morning Blast, where we will be giving a unscripted, quite rambunctious, sometimes rather fruity review of what's been going on as it's Monday over the weekend and Friday, and a preview for today, and a little look at the week ahead as it's Monday. As I said, usual disclaimers apply. This is recorded live. There's no editing. There are going to be swear words. This is going to be trigger warnings everywhere. Hopefully we add some value to your day, and hopefully put a smile on your face. Not sure in what order and on what quantities of each, but there we go. Michael, how are you?
Well, a very good morning to you, Ryan. Good morning, everyone. A very happy Monday. Congratulations. We have made it to the start of the final full trading week of 2025. And actually, I will make a rare exception to our usual mantra, which is that nothing on this show is investment advice. What I'm about to say now is investment advice. To anyone listening, please do not fuck up your year in the last week of 2025.
And I'll tell you what, it's very, very easy for especially a trader that's fairly new in the industry to think to themselves, all the big players are leaving to go, start having their prolonged Christmas break. I'm going to come in to the office, or I'm going to come to the desk or sit at my laptop or whatever, and I'm going to make more money because none of the big fish are in the pond.
There's a reason those big fish are out of the pond.
It doesn't work like that, trust me. I'd love to know over the years if I added up my P&L trading bank holidays or days around in and around Christmas. I guarantee it's not in the green. I just fearful how red it is.
Well, it's questionable whether your P&L for the remainder of the year is in the green.
Yeah, I have my money. Anyways, moving on. Before we crack on, let's get an update from our good friend Clive Lambert at Futures Tech of what's happened on Friday, pricing action, and also levels to watch in the major markets today. Well, not just today, but maybe in the week ahead as well. Equity markets saw red on Friday, but have recovered this morning. The S&P is eyeing its all-time high at 69.54. Dow Futures made another new all-time high on Friday before some sellers emerged, but nothing trend changing. The Nasdaq is still struggling with resistance around 25,870, but held short-term Fibonacci support at 25,120 on Friday's weakness. Similar story on this side of the pond. Weakness, but nothing trend changing. This trend is still grinding up. Bunds, the German government bond, are just shy of their Marubozu resistance of 127.75, but off of last week's 127.05 low. Bitcoin, that pulled back to 87,600 over the weekend, so mixed trade in that one for now. Gold, the yellow metal, I feel obliged to say that, by the way, saw some weakness on Friday that's nicely bid overnight. Silver saw red on Friday, but like gold, bid again today so far. Platinum decided to join the party and make fresh highs for this move on Friday and overnight, trading at levels last seen in 2011 when 1,911 and a half was the high and failure. So we're all eyes on that and see if we can retake that. One story behind Platinum is it feels like everyone is waking up to the need for combustion engines in cars. We're seeing it everywhere. Also, there's a piece out this morning or over the weekend where the Tory government have said if they come into power, they're going to scrap the need for EVs only and stuff. So
yeah, didn't the EU push back some?
Yeah, they pushed their back
standard or some EV thing last week as well.
Another 10 years, I think they'd start with, but this is how the cracks emerge, right? I think it started off a few months ago.
May as well make it 50.
Well, this is it. We mentioned a few months ago on the show, actually, that German car makers were really starting to lobby hard against the EU government's 2030 plan for no more combustion engines to be sold. And at the end of the day, they're just handicapping them unnecessarily by doing it. So it looks like, finally a bit of sanity might be prevailing in that front. But, don't hold your breath. This is politics. London copper pulled back on Friday, but held short-term Fibonacci support at 11,440. Brent, obviously the oil benchmark, is still setting a weaker tone, eyeing the mid-October low and bounce at 59.93. Henry Hub The US nat gas benchmark posted more red yesterday and a bid this morning, found some sellers already. TTF, so gas this side of the pond in Europe, the Dutch benchmark, is trying to put some distance on recent lows of 26.53, but it's not convincing just yet. EU carbon markets finally is now trading December 26th contract. This, obviously everything we talk about is futures rather than cash prices. This is strong resistance just above 86.73 and 86.99 and 87.14. So that's the levels to watch on the upside. Early support is 85.62. And if you're wondering why we keep talking about carbon markets, obviously it's not exactly a actively traded contract. It's because Clive is, I'm going to blow his own trumpet. No one else will, especially not recently. He's very good at the carbon markets and he's got a lot of high value clients that like carbon. So that's probably I'll keep those a readout. But that's it from Clive. So thank you very much.
Good stuff. Thank you, Ryan, and thank you, Clive, as always. Where should we start this morning? Actually, let's go back to Friday, because we did, as Clive alluded to, have a bit of a lurch lower in the equity space. The S&P down about 1%, the Nasdaq down about 2%. A lot of pressure coming in after the cash open on Friday. And it seemed that the market was, again, just getting a bit jittery and getting a bit of cold feet around the whole AI theme. Of course, we had earnings from Broadcom after the close on Thursday. Broadcom closed down a fair chunk on Friday. That was after the firm failed to issue guidance for the upcoming quarter, which the market obviously took a rather dim view of. And then we also had news on Oracle on Friday. There were reports doing the rounds that some Oracle data centers that they're building for OpenAI are going to be delayed into 2028 from 2027 due to labour and material shortages. Now, you may be saying, well, why do we care? This is 3 years in the future. Well, of course, Oracle have issued a 5-year forecast, which basically points to exponential revenue growth over those 5 years. So the market is naturally very, very sensitive to this sort of news flow. I will add that Oracle did deny these reports later on, saying that there have been no delays to any of their sites and that they are on track to meet their contractual commitments and all applicable milestones. However, it is just another example of how the market is kind of priced to perfection in some of these AI names. And when we do see them have a little bit of a wobble, that can cause a broader wobble in terms of the market at large. In terms of other bits and bobs, sorry, I'm being distracted here. Someone's trying to ring me.
Stop me.
Goodbye. No, I know it wasn't you. Someone far less interesting than you, Ryan. Don't worry.
To be
In terms of other bits and bobs from Friday, we did have a few headlines on the trade front. The European Union, they're going to put a €3 fee on small parcels coming in from overseas. This is kind of similar to the de minimis exemptions that we were seeing. I think the UK got rid of the de minimis exemption. The US did so. Europe are now basically doing the same thing.
What I love about
surprise there. Go on.
What I love about this is when Trump brought these in, like these tariffs and the de minimis exemptions and all that stuff, and scrapping all of that. European leaders were like, "How dare he? This is not how international trade is conducted." Yada yada yada. And lo and behold, since the last month or so, all we're hearing out of the EU is like little trickle down effects of the little tariffs coming through that they're trickling down from the US.
Well, yeah, exactly.
Yeah, I suppose they're getting slightly worried they're going to run out of fines that they can find in US big techs. They need to come up with some other ways of raising some money.
Yes. We also heard from the White House crypto czar, a chap called David Sachs, who said that he does not believe China will accept NVIDIA's H200 chips, believing that China wants to be semiconductor independent. And actually, in keeping with that, Bloomberg citing sources noting over the weekend that China is preparing as much as $70 billion in incentives for domestic chip manufacturing. Actually, on this note, it is paywalled, but if you do have access to the Times, there was a very, very good column on semiconductors and chips in the Sunday Times yesterday, written by, of all people, Rishi Sunak, the former Prime Minister. But it is very interesting if you get 10 minutes spare.
I've got to say on this, again, we not just patting ourselves on the back, but we were talking about this a little while ago, that it's all well and good them saying, oh yeah, do you know what, you can now buy these chips. But as we said at the start of last week, all the commentary we heard out of China was that they don't want the chips anyway.
Well, exactly. There's two sides to the deal, right? Moving on from that, we did hear quite a lot from President Trump on Friday and over the weekend. Sources close to the president reportedly noting that Trump is not certain that his economic policy will translate into wins in next year's midterm elections. What does that mean? There's a likelihood he changes tack in order that he does win in those midterm elections. He was also saying that he thinks prices will, and I quote, be in good shape by the time the campaign comes around next spring. Well, weirdly, that's the first time Trump has ever been in line with the Fed's inflation forecast. But I wouldn't expect any harmony on that front. And actually, speaking of Fed, reporting now is that Trump is leaning towards either Kevin Warsh or Kevin Hassett as the next Fed chair. I will throw this out there right now. Kevin Warsh is probably the only person who would be worse at the job than Kevin Hassett would be. For those unfamiliar, this is the chap who in 2009 was running around warning everyone that we were on the verge of an inflationary spiral, seemingly forgetting that we were in the midst of the GFC. And then he actually left the Fed in 2011, basically in a strop that they wouldn't tighten policy while unemployment was at, 8-9% or whatever it was. So this chap is a complete and utter moron. He has been a hawk for his entire career, up until about the last 2 years when it became possible for that he would be in the front running for the Fed chair job, at which point he's undergone this sort of Damascene conversion to a policy dove. And he's now running around saying that rates should be cut dramatically, basically to try and, bootlick President Trump, let me put it somewhat politely.
I've got to be honest, I'm very surprised that it seems to be more of a two-horse race now than it has been in about 3 months.
Oh, but is it?
Well,
is it really? Is it just drama? Is it made for TV?
The optics of it.
No, I agree with you. It is a bit weird that we seem to whittle down the shortlist and then add a few names to it every 3 weeks.
Well,
it's very peculiar.
Yeah, we've now gone from 100% certainty into about 75%.
Yeah, God only knows what's going on there. Trump was also saying that he thinks that whoever the Fed chair is should consult with him on interest rates, God help us, and that Trump thinks rates should be, and I quote, 1% or lower a year from now. This is, again, something we've discussed on the program previously. Trump looks at the Fed funds rate as if he is a real estate developer, which he is. In real estate, the bigger you're building, the better you're building, the more modern you're building, the lower the interest rate you pay on that financing. Trump is basically saying because the US is, in his view, the strongest and the most creditworthy economy in the world, it should have the lowest interest rates in the world. I would not want to be the White House intern who has to explain to him why that's completely false. But speaking of Kevin Hassett, he was on the television over the weekend. He was saying that if he is appointed as Fed chair, he would consider President Trump's opinions on policy, but that the Fed would nonetheless remain independent if he was running the show. Not entirely sure I believe that, but there we go. Moving on from that, just a couple of other things from me before we move on to the overnight news roundup. The Bank of Japan, a few sources stories on the BOJ over the last 48 hours or so. Firstly, Bloomberg noting that the BOJ is said to see the hiking cycle extending beyond 0.75%, which is, of course, where the overnight rate will be when the BOJ deliver a hike this Friday. Apparently, the BOJ are no closer to pinpointing where the neutral rate might be, which I'm sure is incredibly helpful for us all. But the nub of that is they will stick with their prior guidance of further hikes if the economy evolves in line with their outlook. And also Bloomberg reporting that the Bank of Japan could begin to sell down some of its ETF holdings as soon as January. I wouldn't worry too much about this because I'm pretty sure in terms of their JGB holdings, the pace at which they're unwinding the balance sheet is going to be about 150 years before it gets back to zero. So they'll probably go at the same glacial pace when it comes to the ETF holdings, but nonetheless something to keep an eye on. And last but by no means least, in what feels like a bit of an inevitable headline, to be honest with you, The Information reporting on Friday that various polymarket bets, including those on OpenAI and on Alphabet, have raised suspicions of insider trading. Who on earth could have seen that one coming? Exactly. As I said, it did have an air of inevitability about it, that one. But, go on.
No. I mean, it's an interesting one because obviously, there's very strict legal limitations when it comes to sports betting and obviously players betting on sporting events. It's, even if you're betting on games you're not involved in, you're just not allowed to do it. And obviously there's same regards with insider trading on regulated stock markets and whatnot. So it's interesting to see how they will crack down on this, because I believe there might be some kind of, is there some legal loopholes? Is it treated the same as insider trading, or is it treated the same as sports gambling? I think this could be something that drags on for quite some time. And obviously, the Kalshi and Poly market, no one can deny they've had huge success recently, but this is only going to get more and more, that's how the eyes of the regulators are only going to get more and more intense, especially as we're leading up to the elections, because, the Trump president market Trump to win midterms and all that stuff in these markets, it's going to be huge markets. And I think you're going to see a lot of, pressure on these companies to kind of.
Yeah, I don't know for definite, but I'm pretty sure that a lot of these event contracts, as they're being called, are sort of under the purview of the CFTC. So we'll see how that develops.
Yeah,
but yeah, I agree. Certainly want to keep a very, very close
definitely.
But anyway, that's me done for time.
Cool. So thank you for that. So let me read some choice headlines from the Overnight News Roundup. As always, do follow Zach Eisman on Twitter. Do follow our Substack, which is called the Overnight News Roundup, for a very in-depth update for all the news that you might have missed while you were sleeping, and you should be aware of to get yourself ahead of everyone else on the trading day. But starting off with SpaceX, funny enough, SpaceX is selecting investment bankers to advise on a potential IPO. The company's valuation has doubled to around $800 billion since the summer, largely thanks to Starlink's growth. This could be the biggest tech IPO in years. Again, we've mentioned in the past that there's a big question of where this is going to be listed. There's probably a poly market market for this as well. My bet, and it still remains that way, is they could be the first serious company to launch on the Texas exchange, which should be coming up any time now, really. That seems to be like kind of what was mentioned earlier on a few years back, so we'll see how that goes. Roomba. Then the Roomba maker, iRobot, declares bankruptcy. iRobot, the company behind Roomba Vacuum, has filed for bankruptcy. It owes $352 million to a contract manufacturer, with nearly $91 million of that debt already past due.
Just very quickly on that one. That is another classic example of basically Elizabeth Warren being a shit politician, because, to cut a very long story short, Amazon wanted to buy iRobot. Elizabeth Warren went, absolutely not, I'm worried about competition. iRobot has now gone bankrupt. Do you want to know who owns the firm now?
Amazon.
No, all the Chinese banks that extended funding to it. So well done for handing that one to your arch enemy.
Well, no, that's just typical politicians then, isn't it? They can't do the right thing for doing the shit thing. Zelensky offers to drop NATO membership to end the war. This is quite a significant development. Ukrainian President Zelensky offered to drop Ukraine's aspirations to join NATO during 5-hour talks with US envoys in Berlin. Negotiations are set to continue today, with allied security guarantees for Kyiv the central focus. CEOs keep spending on AI despite lousy returns. 68% of chief executives plan to increase AI spending in 2026, even though less than half of the current AI projects are generating positive returns. Investors want results in 6 months. Most CEOs say it will take longer. Again, this kind of theme seems to be growing. The whispers that actually no one's actually making money out of AI, apart from those on the chip front, seems to be growing. Sticking with AI, OpenAI ditches its 6-month vesting cliff. OpenAI told staff it's ending the policy requiring employees to work 6 months before their equity vests. The move could help AI giant compete for talent in an increasingly heated market. For those unaware, what this means is basically, as you work for the company, you get equity. Might be for every year you work, you get X percent. And what they're saying is you'll actually start receiving that equity after 6 months. So you only have to spend 6 months at the company before you get some equity that you can then sell. Next story, 9 million Americans have missed student loan payments this year. More than 9 million US student loan holders have missed at least one payment in 2025, as delinquencies in the 1.7 trillion market soared following the end of Biden's post-pandemic payments holiday. Coca-Cola proposed sale of its Costa Coffee is at risk of falling apart. The company is holding a last-ditch weekend talks with private equity firm TDR Capital to try and salvage the deal. China's factory output growth hit a 15-month low, while retail sales posted their worst performance since zero COVID ended. Property investment is down nearly 16% year on year. Beijing desperately needs new growth drivers, and it's struggling to find them.
And again, if that's how bad they're happy to tell us it is, it's 10 times worse on the ground.
Exactly that. Bank of Japan is likely to start selling its massive pile of exchange-traded funds as early as next month. The process is expected to take decades to complete, as Michael has mentioned many times, in fact. This will take a long time for them to sell. And don't expect it to be rocking markets. They're not wading in and selling bucket loads. They'll be just drip feeding this in. President Trump told the Wall Street Journal he's uncertain whether Republicans will hold the House in midterms because the economic policies haven't yet kicked in. And Michael alluded to this earlier on. He said, I think by the time we have to talk about the election, our prices are in good shape, according to Trump. China's Vanke proposal to extend, that's a property construction giant, proposal to extend a bond payment was rejected by holders, and the developer is now scrambling to avoid a default this week. The rejection is fueling fears Beijing won't step in to save the troubled property companies. Apple, their long-term DRAM chip agreements are expiring, which could force the company to pay higher prices to Samsung, HK Hynix, starting in January 2026. Hong Kong now, they've convicted pro-democracy media tycoon Jimmy Lai in the, I believe that's how you say his second name, Jimmy Lai, in his national security trial.
No, you were spot on.
Lai, yeah? This is obviously his national security trial, a case that has drawn international condemnation. And penultimate headline for me, United Airlines and American Airlines will take stakes in Brazil's Azul Airlines after a judge backed a restructuring plan. The carrier is expected to exit Chapter 11 within weeks. And finally, from me, China's state-owned Jiangxi Copper, I'm hoping I haven't butchered that, has won board support for its sweetened bid for UK-listed Seoul Gold, beating out backing from BHP and Newmont. And that's it from me. Back to you in the studio.
Very good. Thank you, Ryan. In terms of today, then, we have a few bits and bobs on the data docket, but it is by far and away the most uninspiring day of what is actually a blockbuster week ahead. At 10 o'clock this morning, we get the latest industrial production figures from the Eurozone. And then this afternoon at 1:30 London time, we had inflation figures from Canada, where CPI is seen rising 2.3% on the year in November. And also the Empire Manufacturing Index out of the States, which is expected to fall to 10 in December, down from 18.7 last month. And also just bear in mind, we do have a couple of Fed speakers today. We're due to hear from Governor Myron. He is speaking a couple of times and will, of course, explain his dissent at last week's meeting in favour of a 50 basis point cut. And we also hear from New York Fed President John Williams this afternoon as well. In terms of the rest of the week, then, there is a hell of a lot going on to round out 2025. We have 5 G10 policy decisions due this week. On Thursday, the Bank of England set to deliver a 25 basis point cut, lowering bank rate to 3.75%. While also on Thursday, all 3 of the Riksbank, the Norges Bank and the ECB should stand pat at their final meetings of the year. Meanwhile, on Friday, the Bank of Japan, as we've alluded to earlier on, are set to continue to normalise policy, delivering a 25 basis point hike to 0.75% and also signalling that further rate hikes will be on the cards if the economy evolves in line with their expectations. We've also got a busy week of economic data this week. Of course, highlighting things will be the latest US labour market numbers. They're due on Tuesday. And then the US CPI figures, which are due on Thursday. In terms of that labour market report, it is going to be a little bit messy because we will be getting the full November labour market report, and we will also be getting the establishment survey only for October. So that means we will not be getting an unemployment rate or a participation rate for the October numbers. Of course, we'll talk about this in more detail tomorrow, but the headline metrics are expected to show non-farm payrolls having risen by 50,000 last month, with unemployment having ticked higher to 4.5%. The similar scenario applies to the CPI numbers that we get on Thursday, where we will be getting the November report in full, and we'll only be getting partial data for October, which means we'll get the year-on-year print, where headline inflation is seen at 3.1% and core inflation seen at 3%, but we won't be getting any month-on-month comparisons because there isn't any data to compare it to. Also on the data docket this week, tomorrow, we have flash PMI figures due from pretty much everywhere, as well as the October US retail sales report. And then we've also got a busy week of data here in the UK, including the the October jobs numbers tomorrow, November's CPI data on Wednesday, and then on Friday, the latest public borrowing figures and November's retail sales report. Do note, just in the interest of good order, that the Bank of England's Monetary Policy Committee will get advance sight of both the employment and the inflation figures ahead of that policy decision on Thursday. In terms of other bits and bobs to focus on this week, we do have a 20-year Treasury auction on Wednesday, $13 billion worth being sold off there. A fairly busy week of Fed speak as well, of course, in the aftermath of last week's hawkish, but maybe not so hawkish 25 basis point cuts. And it's a fairly busy week of earnings as well, although we are through the bulk of earnings season. On Wednesday, after the close, market participants will see earnings from Micron, of course, notable in terms of the AI story. And then after the close on Thursday, we have earnings due from Knight and from FedEx. And of course, amid all of that, participants will continue to focus on trade, tariff, geopolitical headlines, any news on who the next Fed chair might be, any random musings from President Trump. And as we've alluded to many, many times, it is the last full trading week of 2025. A lot of participants are going to have closed their books already. If they haven't, participants are going to be asking themselves how soon and how early in the week they can close their books. So do expect conditions to get very thin, very wispy, very much like my Barnet.
Yeah.
And that will become worse and worse as the week goes on. But for the time being and for this morning, that is all from me.
That is wonderful. Michael, excellent work as always. Listeners, thank you so much. And like Michael said, everyone is winding down this week, and so are we. So this week is the last week before pretty much the new year. So thank you for joining us. Hope you had as I said at the start of the show, I do hope you all had a great weekend. Go out, make some money this